Hi, my name's Phil. I'd like to talk about politics. And is Donald Trump about to learn why governments voluntarily cede power to central banks? After announcing that he is dismissing a member of the Federal Reserve on what looks like trumped up charges, if you'll pardon the expression, there was a prompt sell-off in the American bond market yesterday. The consequence of this is that all that extra debt that Trump is loading the American people with is now going to be more expensive to service. So how exactly does the president, wanting to sack someone working for the National Central Bank, lead to investors in the bond market pulling out, and what could be the long-term consequences for everyone? But first, for daily news and politics, please click the subscribe button to stay notified. So some allies of Donald Trump have alleged that the Federal Reserve Governor Lisa Cook had broken rules relating to mortgages. She hasn't been investigated, she hasn't been found guilty of any breach, but a partisan accusation was enough for the US president to declare he would be sacking her from her post. Needless to say, she has not vacated her post, given that Trump has no power to sack her based on hearsay. But the move nonetheless produced a reaction from bond investors. Investors engaged in a noticeable sell-off of long-term bonds yesterday. You can take this as investors saying they're happy that the US will pay its debt in the next few years because short-term bonds seemed fine, but they're not convinced further in the future. Basically, investors are less keen to fund long-term American debt, specifically because of the interference of Trump's government. Yet Trump's one big beautiful bill loads up the USA with masses of extra long-term debt. He's now made it way more expensive to service, although that's for a future government. Oh, he's fine, don't worry about him. The cost won't hit while he's president, or possibly even while he's still alive. But Americans who've got a fair amount of life left in them could be in for a rude awakening. This touches on what Freddie and I were talking about in the video yesterday. Countries addicted to debt. And when that happens, you want that debt to be as cheap as possible. So governments like it when interest rates are low, right? But if politicians interfere with interest rates, instead of letting them be set by independent monetarists at the central bank, then what you get is high inflation. But high inflation is also a problem for the government. I mean, apart from the fact we know voters don't like it, right? But it impacts the wages the government have to pay for the public sector, the costs of medium and long-term projects, and if allowed to run out of control, the stability of the entire country. Investors in the bond markets need to know that the yield they're being promised is going to be paid. You know, there's always a risk of an investment going sour, of course, which is why you have a large portfolio of investments. You can accept losing a few as long as your wins massively outweigh your losses. But for an individual investment, such as American bonds, the higher the risk of default, the more you demand before you'll invest in them. Like American bonds are supposed to be the safe investment. It's where you go when you're not too sure about the stock market. It's why the return is relatively low. It's like, okay, we're not going to give you a lot of return on it, but it's safe. What happened yesterday was long-dated debt was sold off. And this uncertainty in the market, of course, raises the cost of debt for the American government. Trump's actions here, motivated by a desire to control everything from the White House, is working against his need to keep borrowing more and more for the rich guy tax cuts as cheaply as possible. He's literally making his debt habit more expensive. The more he undermines the independence of the central bank, the more he will put off investors. Back in 1998, when the last Labour government in the UK made the Bank of England independent, we did it a long time after America did, they didn't do it because they fancied giving away power. They did it because they looked at countries like America and gone, do you know what? That makes investors more confident. And actually that keeps inflation down. It's the same reason the current Labour government are tying their own hands with some extra rules, which don't seem economically wise. It's to boost that same confidence at a time of economic uncertainty. This desperate attempt to micromanage every aspect of the governance of the United States could lead to financial disaster for America. And of course, countries whose own economies are strongly tied to America, like those of us in Europe, for example. I mean, let's consider a few things. So, little question. What happened in America in 1951? Well, that was the year the Fed and the Treasury signed the Accord of 51, telling the president, look, we'll handle the money. you deal with the speeches. Since then, countries with independent central banks have averaged about 2.4% inflation. Countries without independent central banks is nearer 6% inflation in that time. Over decades, that makes a big difference to your grocery bills, right? Markets noticed immediately. The day the Cook story hit, 2-year Treasury yields slid 8 basis points in 15 minutes. Not because traders adore Cook, but because they smelled politics in the punch bowl. The dollar index dropped 0.5%, its biggest intraday dip in a month. When the world's reserve currency hiccups, oil, wheat, microchips, everything priced in dollars just shivers. Inflation break-evens crept from 2.3% to 2.6% in a week. Now, that's not panic. What that is a polite vote of no confidence in what Trump is doing. I mean, look at Turkey, for example. Erdogan fired 3 central bank heads between 2018 and 2021. The lira lost 60% against the dollar. Argentina's government, previous one, arm twisted its monetary authority, inflation triple digits. The pattern is very consistent. When politicians grab the wheel, the currency has to find the guardrail. Does anyone really want the dollar treated like the peso? What are the experts saying? You've got Larry Summers said this is the most serious threat to the Federal's Reserve's independence in his lifetime. Mohammed El-Arian, if credibility cracks, he said, tack on an extra full percentage point to inflation. He said, kiss that 7% mortgage goodbye. It's now 8.5%. Art Laffer, the curve guy, the Laffer curve guy, misinterpreted by so many right-wing frauds these days. He tweeted that political firings like this risk the hard-won reputation of US monetary policy. So you've got supply-side economists, Keynesian economists agreeing. So it's not ideology, right? This is just basic economics. So what happens next? Well, imagine like 3 dominoes. Your first domino is Lisa Cook is removed. Precedent shattered, right? You've got political interference now. Remember the reaction in the bond market yesterday was caused by the threat of political interference. That interference hasn't yet materialised. So then domino 2. So let's say that interference materialises. Bond yield spike. Mortgages, car loans, credit card rates all follow. Then your third domino. Higher borrowing costs slam the economy. Because businesses, right, so when they're looking to expand, they want to invest, right? We all want businesses to invest because it's going to mean more jobs and more productivity, more profits, and therefore more tax revenues. We all like that. So when they're considering borrowing for investment, they have to consider how much it's going to cost to pay back that loan and how much they expect to get. They have to factor in a margin for error because they can't afford to make a loss on the investment. They must be very, very confident it will give a return. Now, if you raise those borrowing costs, that means that loan for investment is going to cost you more. So you now need to know that the returns are going to be better to risk it, which is going to reduce overall levels of investment because there'll be times where, because of the higher cost of borrowing, that calculation goes, yeah, we can't be sure we'll get a return on this. So stocks sell, pensions shrink, shoppers close their wallets because they get worried, right? Whenever there's bad economic news, that gets people to go, oh, maybe I shouldn't spend as much. And you get like a vicious circle. The Fed, at this point, will be wearing political handcuffs, panics, so it cuts rates too late. Then it cuts rates too much, and it keeps repeating that. You end up with stagflation like 1970s. Goldman's rates desk puts a 15% chance on this change starting within 6 months if Cook is ousted. Now, you may think to yourself, oh, that's quite low. Yeah, so the chances are this will not happen. Okay, that's all right then. But then remember that the entire subprime mess that triggered the banking crisis, that was considered less likely to blow up. The global economy never recovered from that banking crisis. We've also taken a hit from COVID and increasing geopolitical instability. There are multiple wars around the world taking their toll on trade and productivity right now. Trump's tariffs are also presenting a new set of shackles on world trade. Things are actually quite fragile. And now Trump is attempting to inject a new factor with economy pounding qualities. There comes a point where it's not a case of what are the chances that this particular policy of Trump's causes an economic meltdown. You have to consider the whole thing. You know, he's doing so many things which almost seem designed to destroy America's financial system. Seriously, someone stop him talking to Putin, because I think he's putting these ideas in his head. Any one of these things could do it. The tariffs, the attempt to control interest rates, not just politically, but based on stupid politics. The immigration crackdown, massively disrupting the labour market. The threat of over-aggressive policing in some of America's most productive citizen states. Each of these policies could create a domino effect that leads to financial meltdown. You know, there comes a point where it's not a case of disaster if America gets unlucky. They'd have to be stunningly lucky to avoid it at this point. Trump is literally shouting twist when he's got 20. But let me know what you think in the comments below. And for more content, you could subscribe to the channel or even join for access to streams and behind the scenes updates. Thanks for watching, and until next time, I'll see you later.